All right, friends. So today we are going to revise some quick points regarding realization account, which you all have to prepare while solving any questions of dissolution of firm. So it's important points to remember in case of dissolution of firm. So we all know that we have to prepare realization account for each question which was asked about dissolution or insolvency of firm. So while preparing realization account, some important points are there that you have to keep in mind. First, whatever assets and outside liabilities, assets whether they are tangible or intangible, non-current or current, except cash and bank, we all know that it should be first transferred to realization account from the balance sheet which was given uh, in your question on the date of dissolution. So first point, always show your assets and liabilities at the gross value. It means if there is a provision is given to you, say for example in case of debtors there is a provision for doubtful debts is given. So provision for doubtful debts should be separately shown. Data should be transferred at gross value, and provision should be transferred as liability. Same way, if there is a discount on creditors is given, the creditors should be shown as gross value, and discount on creditors should be carry forward or transfer to realization as an asset level. All specific reserves should be transferred to realization account. We all know that the free reserves, in case of dissolution of firm, should be distributed among partners in their old P&L ratio. But specific reserves should be credited to realization account. It's a better practice because uh, specific reserves generally is related with some asset. Say for example there is a JLP reserves is given to you, or investment fluctuation reserves is there. So JLP and investments are closed and transferred to realization account, so their reserves also should be transferred to realization account to match assets and liability concept. Third point, if partners are taken over more than one assets or liabilities, it should be shown as a list under partner's name. So if any partner is taken any asset at an agreed value, so we have to credit realization account and debit should be made to respective partner's capital account. But if there is a more than one assets are taken over by partner, then it should be shown in the realization account under the name of partners capital account as a list format. So if partners is taken over any stock, so say for example X is taken over any stock, so by X capital account, and under that you have to show stock, investment, land and building, whatever the assets X is taken out. Same way the liabilities, in case any partners assumes any liabilities to pay by himself, and if it is a more than one liabilities, then it should be again shown under the partner's name account in form of list. Because of number of assets are disposed of in case of dissolution and cash is received for the same, so we have to credit realization account and debit cash and bank account. And obviously under cash and bank account head, we have to give the list of all assets that are disposed of or sold out, and same way the liabilities uh, that are settled through cash, it should be debited to your realization account and credited with your cash and bank account. Again, cash and bank account is the head or title, and under that, obviously, you have to list down all the liabilities that are paid in cash. Realization expense should be recorded separately. It should not be clubbed with your liabilities payment. It is a loss, it is an expenditure that should be disclosed separately in your realization account. So, realization account should be debited, and obviously, cash and bank should be credited. Now, there are certain specific transactions, so special transactions, we can say that. So, if there is an unrecorded asset is given to you in your adjustments, and that unrecorded asset realize some cash, then obviously proceeds received from disposing of this unrecorded assets is a gain to you, and profit and loss should be credited to realization account, or through it is passed through your realization account. So it is a profit, it is a gain. So realization account should be credited, and cash and bank account should be debited with that. Same concept goes with any unrecorded liability. Obviously, unrecorded liability, you have to pay your unrecorded liability, which is a loss to you. So, realization account should be debited with that and credited with your respective cash and bank account. Then there is a one special transaction where some assets are used for the settlement of liability, which we call swap transaction. Say for examples, debtors are assigned to settle our creditors. So debtors and creditors are swaps. So such transactions should be ignored. There is no need to record such transactions because both debtors and creditors are closed and transferred to realization account. So obviously, if debtors are given away for the settlement of liabilities, such transactions need not be entered in your realization account. It should be ignored. After all transactions are being recorded in your realization accounts, which are given in your adjustment list, before closing your realization account, one should check whether any tangible asset is left without any realization or not. That means if any asset rather, or more than one assets is left, there is no sold out or taken over by partner, then it is implied assumption is that such asset realizes book value, and you have to record that asset at its book value by crediting your realization account, and debit should be made to your cash and bank account. And same rule applies with the liabilities. If any liabilities is left, say for example salary outstanding entry is not given and salary outstanding is there, so you have to pay your salary outstanding. So obviously realization account should be debited and cash and bank account should be credited with that. But if there is intangible asset is left, say for example, there is no adjustment for goodwill settlement, and goodwill is shown as an asset in your balance sheet, which is you transfer to your realization account, and there is no adjustment regarding goodwill is given to you, then it should be ignored because under the assumption that it is an intangible asset, and if it is specifically not mentioned in any adjustment that whether it is realized or not, we are assuming that such intangible assets realize nothing. So it is booked as loss in our realization account. And last, after making all adjustments and after entering all transaction in your realization account, you should close your realization account, and the difference or balance is your realization profit or loss, which should be transferred to your old partner's capital account in their old P&L ratio. It is distributed among old partners in their old P&L ratio. So that is it. I hope this will help. uh, Obviously, how to prepare realization account is the main uh, aspect of your question. It is one of the most important thing in your question. So I hope I covered all the aspects about how to prepare your realization account. Okay, thank you.